If you want to invest like a pro as a beginner, be sure to pay close attention to this video. I'll be talking you through how the legendary Warren Buffett, we should worship the ground that he walks on, and how the legendary Warren Buffett invests, and how you can do the same, no matter what background you come from. If you like the sound of that in today's video, smash the like button and let's get right into it. Warren Buffett is widely considered the greatest investor of all time. At the age of 92, he still serves as the CEO and the chairman of Berkshire Hathaway. Man's a legend. Since taking over the company in 1965, Buffett grew the value of the stock at a compound annual gain of 20.1%. For comparison, that's nearly double the 10.5% annual total return the same time span. This difference may not seem massive until you realize the power of long-term compounding. To put it into context, every $1,000 invested into Berkshire Hathaway would have turned into $36.4 million at this time. That difference is literally immense. So how does Buffett do it, you might be asking? Warren Buffett's greatest advantage is his fundamental understanding of the value of investing. He knows that stocks are not just prices and charts, but an ownership stake in a real business. Therefore, you need to think about this like a business owner when investing. Much of Buffett's success has come from investing in companies with sustainable competitive advantages and holding them long term. These are businesses with wide economic moats that generate real cash flow. Buffett then uses the earnings and dividend payments to reinvest and acquire ownership in more productive businesses, and this creates a significant compounding effect over time. Although Buffett's company, Berkshire Hathaway, does not pay out dividends, it sure does love receiving them. In 2022, their public stock portfolio is expected to generate over $6 billion in dividended payments. That's $6 billion in 1 year. This is on top of all of their operating income from fully owned businesses like the BNSF Railroad, Furniture Mart, etc. In today's video, I'm going to break down all of Warren Buffett's current dividends and explain the massive role they play in his investing success. Events like the 2022 stock market crash may have you feeling down and uncertain about investing. Maybe that's actually a good thing if you're just getting into this, by the way. Negativity is everywhere you look in the media, but this isn't the time to lose sight of your long-term goals. The reason I'm making this video today is to help refocus our community on some fundamental investing principles. There's no one better to help than looking at Warren Buffett and his skill. Warren Buffett is what's known as a value investor. We want to be value investors. This method of investing is where you aim to buy stocks that are trading for less than their intrinsic value. This seems simple, but there's quite a lot more to it. Even the great Warren Buffett has seen his investing style evolve significantly over time. He went from trading what he called used cigar butts, not a flattering term, to becoming a long-term business owner. This transition to focusing on the quality of the underlying business was largely influenced by his investing partner, Charlie Munger. The importance of quality was best learned through their investment in See's Candies. They weren't going to invest into See's Candies at first because they didn't want to pay more than what they had offered, but then took some constructive criticism and decided to change their minds. Walking away from See's Candies would have been a terrible idea for them because in 1972, Berkshire Hathaway bought the entire company for $25 million. That year, the company had $31 million in sales and made $2.083 million in profits after taxes. Based on Buffett's valuation of See's Candy, he was initially unwilling to pay more than the $25 million he offered, and that would have proved to be a silly decision. As of 2007, quick update for you, See's Candies has earned Berkshire Hathaway $1.35 billion in pre-tax earnings. So based on this, it was irrelevant whether he paid $100,000, $1 million, or even $10 million more. And since then, in 2019, Buffett said that See's Candies has produced well north of $2 billion in pre-tax earnings, and that the chocolate company remains a cash cow for Berkshire Hathaway, even after all these years. See's Candies exemplifies what Buffett looks for in a business. The company was built as a competitive advantage through significant brand and customer loyalty. Buffett has even said that long-term competitive advantage in a stable industry is what he seeks for in a business. If that comes with rapid organic growth, great, but even without organic growth, such a business is rewarding. We will simply take the lush earnings out of the business and use them to buy similar businesses elsewhere. This is exactly what he did with See's Candies. The company had limited potential for scaling, but was able to provide a reliable cash flow. The mindset of buying great businesses at fair prices would bleed into all of Buffett's future investments. Now, some of you may be thinking, what does this have to do with dividended stocks? See's Candies is by principle very much a dividend stock. It's just that the company is fully owned by Berkshire. But virtually all of the earnings are paid out to Buffett so he can reinvest into new companies. Warren Buffett does not specifically target dividend stocks, yet the majority of his holdings pay dividends. This correlation comes from the types of businesses that he targets. Dividend stocks are often highly profitable in mature companies with proven business models, and this overlaps heavily with Buffett's investment preferences. Berkshire Hathaway is on pace to collect $6.07 billion in dividend income over the forward year from its public stock portfolio. Just 5 of those holdings will account for 71% of the total output. Buffett's largest dividend payer is a new addition, Chevron. In 2022, he purchased 163.53 million shares, giving him an 8.4% ownership of the company itself. Chevron pays quarterly dividends of 1.42 cents per share, giving him a forward-looking annual dividend of $5.68. This gives Buffett a total annual dividend income of $928.86 million from this company. I don't know about you, but I wouldn't mind that at all. On top of this, Chevron grows its dividend payments over time and will likely increase it in the coming months alone. This will increase his future payments even more. Chevron's last dividend increase was to 5.97, and it looks like Chevron will soon be Buffett's first $1 billion dividend payer. And as I mentioned earlier, this is a new addition to his portfolio. So what's his cost basis the bulk of? Berkshire's buying activity for Chevron occurred in the first quarter of 2022, and Buffett has an estimated per-share cost basis of $146.56. But this put his dividend yield on cost at 3.88, at $3.88. Buffett having previously sold energy stocks after a few years, but he's never owned a stake quite like this. Buffett's second largest dividend payer is Bank of America. He purchased this position in 2001 at around an average cost of 14% per share. He owns over 1 million shares, giving him a 12.9% of the entire company. Bank of America just increased its quarterly dividend payments by 4.76%, making the forward-looking annual dividend 88 cents per share. Bank of America will be paying Berkshire Hathaway $908.9 million in dividends over the coming year. This puts the dividend yield on cost at around 6.28% for him. His third largest payer is another new addition, Occidental Petroleum. In 2022, he acquired his biggest bet yet. Berkshire has 188.36 million shares, representing 20.2% ownership in this company. Occidental cut dividend payments in the 2020 oil crash, but is slowly increasing them once again. At this low level, the dividend was only expected to pay out $98 million to Berkshire. The following year, however, this bound to grow. In the future, on top of this, Berkshire owns $10 million in preferred stock. From his history with the company paying out over $800 million in preferred dividends, this puts Occidental's annual dividend income at $897.95 million. Fourth on this list is everyone's loved Apple. In 2016, Warren Buffett invested heavily in Apple, and Berkshire Hathaway now owns 5.7% of the company. He already seen a significant return on his investment, but I think it's poised to be his next great dividend growth stock. This year, he's set to earn $842 million in dividends. His cost base is estimated between $34.26 per share, giving him a 2.68 dividend yield. Apple is currently the most valuable brand in the world and has a massive customer loyalty base. Nice. Additionally, it's a huge stock repurchase program and has been increasing its dividend for over 9 years. I would not be surprised at all if, in 30 years, Buffett would be doubling his initial investment every 2 years through dividends, similar to his investment in Coca-Cola. Speaking of Coca-Cola, that comes in at number 5 on the list. Bonus for you. Buffett has owned the Coca-Cola company since 1988. This is one of the best examples of long-term investing that fits the See's Candies model. This year, that investment will pay more than $704 million in dividend income with an initial cost basis of 3.24 cents per share. Buffett now boasts a 54.2% dividend yield on cost. This means that he is more than doubling his initial investment every 2 years through dividends alone. Coca-Cola has been consistently growing in dividend for almost 59 years, and there seems to be no indication that this trend will stop anytime soon. This is a classic example of investing in a company with strong competitive advantages and holding long term. These 5 stocks make up over 71% of the $6 billion in forward-looking dividends income. Alongside Coca-Cola, there are many other long-term holdings like American Express and Moody's, which boast fantastic dividend yields on cost. However, this is just his public stock portfolio. Berkshire Hathaway has a massive portfolio of fully owned businesses as well. Buffett takes the cash flow from dividends and fully owned company earnings to reinvest into buying more productive assets. This fuels the compounding machine that is Berkshire Hathaway. When you continually reinvest to increase future earning power, that's a fantastic method for wealth building. If you like this content, make sure you like this video and subscribe for more. See you in the next video. I know I found it useful. I think you did too. Bye.